Good morning, afternoon, or evening, folks, and welcome to Cast of All Trades, the show where we talk about developing skills, exploring ideas, and following curiosity. I'm your host, Orion Siebert, and in this episode, I talk about credit cards and how to make the most of them. Credit cards can be both a blessing and a curse, highly profitable for some, or an anchor dragging you to the depths of debt for others. The United States as a whole, at the time of recording this episode, is $1.36 trillion in credit card debt. While at the same time, people who can use credit cards effectively and responsibly are able to travel the world, experience once-in-a-lifetime events and opportunities, get bonuses at every hotel they stay at, enjoy free gift cards, and so much more for very cheap, if not totally for free in many situations. Prepare to learn about what credit cards are, why and when you should use a credit card, the benefits of using credit cards, how credit card companies can afford to give out so many of these amazing benefits, your credit score and how that impacts your credit card options, 3 recommended credit card strategies along with some one-off cards, common credit card mistakes, the skills that will help you make the most of your credit cards, and so much more. Credit cards are a touchy topic for some people, namely because of the potential credit card debt that they may have. That said, my family has shown me the immense benefits firsthand that we can get from using credit cards effectively and responsibly. Many of our trips and many of our Christmases over the years were entirely funded by credit card points. This is all to say that credit cards have potential for amazing good when used correctly, and massive trouble if used poorly. If you're interested in more topics like this where I talk about life skills, then comment and subscribe to let me know that you want more of this, and so that you don't miss out on said episodes. I believe that about covers it. So without further ado, let's talk about credit cards. What are credit cards? While it may seem obvious to some, I think it's still worth explaining since not everyone knows about or really understands what credit or debit cards are for that matter. Let's start with debit cards. They're a bit simpler to begin with and going to be a good solid basis for understanding credit cards. If you have a card tied to your checking account at your bank, in all likelihood it's going to be a debit card. It allows you to make purchases using the money that you have stored in your bank under that checking account. There's actually a fairly interesting history behind buying like this, using some sort of third-party medium to exchange your value for someone else's goods. As the name implies, a checking account, you're supposed to make purchases using paper checks tied to that account. This originally started back when gold was the primary form of currency, when gold, silver, heavy metals, heavy precious metals were commonly used for coins or for other types of currencies. What people would do is when they were traveling especially, people would go to local blacksmiths or some of the vaults to drop off their gold for a nominal fee, something small, essentially just a holding fee to say, I'm going to trust you to hold and store my precious currency so I don't have to carry it around with me all the time. Then, when that person wanted to make a purchase, say that they came across a fruit stall and they wanted to buy some apples or something like that, they would use checks to allow sellers to claim a set amount of gold from that vault that they had previously dropped off their gold at. It was essentially a rudimentary form of a bank account where you would go to a place, you would offload your cash, your currency. In exchange, you would get a set of notes to say, I'm going to exchange this amount of gold I have stored at this location for your current set of gold, for your current set of goods. It's interesting to see how this has shifted a bit over time. Now, checking accounts and debit cards are the modern version of this. So how do credit cards differ from debit cards, where debit cards allow you to make purchases using funds that you already have in your checking account? Credit cards don't automatically connect directly to your checking account. Instead, they tie directly into a line of credit, or in essence, an available loan. They allow you to make a purchase with money that you may or may not have right now and pay later, with the option of paying in multiple smaller payments plus interest, like you would see with many other loans, such as student loans, mortgages, car loans, anything like that. In essence, debit cards draw upon your money when making a direct purchase. Credit cards, on the other hand, draw upon other people's money when making a purchase that you will then pay back at a later date. So, when looking at it in that simple form, why would you use credit cards at all? If I'm going to potentially pay more money in interest or in other costs, buying using a credit card, why won't I just use cash or debit card? The key here is that you only get charged with interest if you have a balance at the end of the payment period. So typically how credit cards will work is that you will have typically a payment period will last about a month where they'll track how much spending you do in that month. You don't automatically have to pay for that statement, is what it's going to be called, at the end of that month. Instead, you usually have about 2 weeks, roughly the middle of the next month, as your opportunity to pay off your statement before you get charged any bit of interest on that statement that you have remaining. Keeping that in mind, perhaps it's a better question to ask, when is a good idea to use a credit card over a debit card? And I would argue in 99% of situations when you're going to make a purchase, it's better to use a credit card with one big asterisk on there. Only buy what you can afford to pay off in full by the end of the pay period or by the statement due date. Even better, only buy what you can afford to buy and pay off in full right now. When you carry a balance and you don't pay it off, your credit card loan in the end of the pay period, you end up paying more in the long run. This is how many credit card companies make their money from loan interest, although I'll be going into this a bit more later on how other credit card companies make their money. And luckily, paying off your loan debt in full is much easier than you'd think. I'm speaking to those people who currently aren't under a mountain of credit card debt and have good financial hygiene, and can be entirely automated with most credit card providers to pay your balance in full each payment period. Just go to your credit card provider's website. There's usually a scheduling option where you can have automatic payments set up. So, super easy to do. It's mostly just a matter of accounting for the most part. So, with all that covered, what are the actual benefits of using a credit card? I've sort of been dodging around this question, and there are many. There are three major categories and benefits I'm going to go over here. There's fraud protection, there's credit card points and cashback, and then another category I call unique benefits. I'm going to go a little bit more in depth on each of these, starting with fraud protection. Fraud protection in particular is quite useful, especially when you're trying to keep yourself safe from potential debit card fraud or credit card fraud. If your credit card information is stolen, it's much easier to cancel any charges made fraudulently and get your card replaced, with most credit card companies having a fairly high balance allocated / set aside for fraudulent purchases, where they'll say, okay, we recognize that you did not make this purchase. We're going to issue you a new card, a new number, a new everything. You don't have to worry about any of those fraudulent purchases that were made. So if your information gets leaked, it's much easier to have some liability protection against that. Compare that to debit cards, where if you get your debit card information taken and you get essentially your entire account drained out, if you lose that money, it's much harder to get that money back, if at all, at least from what I've heard. So using credit cards actually gives you an extra layer of security between you and the outside world for your finances. Next, I want to look at the cashback and credit card points aspect. I'm not going to go too deep into this because there are hours and hours and hours of content online that you can go and learn more about the in-depth nuances of credit card points. But in essence, this is where you get most of your big bucks from this. But let's start off with cashback. This is by far the simplest benefit of a bunch of credit cards that you can get. Basically, it's you spend money, you get a percentage back either as credit card credit or sent as a check. This means that as you're spending money, you're able to get a little bit back to say, okay, maybe you spent $20 on Uber or you spent $20 at a grocery store. Depending on your credit card, they might have a higher percentage of cash back that you get from grocery stores or from Uber, where say, hey, I just spent $20 on this thing at the grocery store, you get 3% cash back on that. Well, if you think about it like this, it's essentially saying, awesome, I get a 3% discount on basically everything that I'm purchasing. And what makes cashback so nice is that it is so simple. Oftentimes when you go to apply for a credit card, it'll be very obvious of what categories are going to get cashback allotted to them, where it'll say groceries minus these two stores, or entertainment minus these things, or very specific stores you might get extra cash back. It's very clearly written about what percentage back you get. So, cashback, it's great. But what if you want to absolutely make the most of your credit card? What if you're willing to put in a little bit extra work to get a lot more out of it? This is where credit card points comes in. This has the potential to be very, very profitable or very, very wasteful, depending on how you spend your points. Here's a very rough breakdown on how to use credit card points effectively. That said, I would highly recommend just going to YouTube and looking up more in-depth guides on credit card points because it's going to change from credit card provider to provider, from ecosystem to ecosystem. But in general, this is a very rough breakdown of how to pretty effectively use credit card points. First of all, whenever possible, don't convert points into cash back. Typically, you're going to get much less cash back than you would if you were just using a cashback card. If you wanted cash back, just get a cashback card and avoid using the points cards. So, if you're not going to do cashback, how are you actually going to make the most of these cards? Look for partners that will give you a high value for your points, places that you can convert and export your points to. A good example of this is exporting your points to certain airlines, where you're able to convert your points into airline miles. Another potential option is for those looking to actually buy things instead of just getting flights. You can look at your credit card's associated points shop for gift cards. This process will often vary from card ecosystem to card ecosystem, but these are the main principles to keep in mind. And it's exactly through those methods that my family was able to sponsor many trips and many Christmases through credit card points alone, by converting our points into airline tickets, into hotel stays, into gift cards to buy Christmas gifts. That's exactly how we did it, and it was great. It worked out very well for us. Next, I want to move on to the unique benefits that you'll find on cards. Now, I'm not going to go over every single unique benefit because, one, not all of them are necessarily quote-unquote unique, but these are the ones that will range and vary more from card to card. And there's a number of additional unique benefits that I'm not going to mention here because some of them are so niche or so limited to one or two individual cards. For this, you're just going to have to look at cards on their own to really see what is everything that this card offers me. But here are some of the common quote-unquote unique benefits you might find to certain credit cards. No foreign transaction fees. That essentially means that when you go abroad and you're going to make transactions using your credit card in those places, in those foreign countries with different currencies, you're not going to get hit with an extra foreign transaction fee of switching from US dollar or whatever your home currency is into this foreign currency that you're working with. Next is buyer's insurance. This is essentially a credit card sponsored insurance plan or policy that goes on top of whatever insurance policy might already be in place or whatever warranty might already be in place on the things that you buy. What's particularly common for this is specific cell phone insurance, where say you buy a new cell phone or a new smartphone and you want to get a little bit extra warranty on it. A number of credit card providers will actually give you an extended warranty that covers much more than you would normally get from a cell phone provider on their own. For example, say your cell phone provider gives you a 5-year warranty on your phone. Well, there are a number of credit card providers that will say, if you make that purchase with our credit card, we'll actually give you a 10-year warranty. It will cover more than that 5-year warranty would through that phone provider. So that's a pretty nice benefit. Next are some of the extra travel bonuses that you might find, such as TSA PreCheck or Global Entry. These are essentially ways for you to just get through TSA a bit faster, or if you're returning to the US, that's what Global Entry is for. It gets you through customs a little bit faster. You might also get special airport lounge access. This is very common amongst travel credit cards, and with some cards even giving you exclusive access to exclusive lounges there. You might also find bonus points or bonus cash back upon hitting certain purchase milestones. This is typically found in the first 3 to 6 months of owning a card, where it'll say, if you buy X amount of dollars worth of value with our card within the first 6 months or within the first 3 months, we'll give you 50,000 miles or we'll give you $500 cash back. It's essentially a way of the credit card companies incentivizing you to get their card and use it a bunch early on. The next unique benefit I'm going to touch on is the partner company upgrades. This is fairly common, especially with travel credit cards, where you might get an extra bonus status at hotels with flights or with rental cars, where a common one is most credit cards, if you buy a rental vehicle through, say, Enterprise, most credit cards will say, hey, if I show up there and there is an available upgraded car, that you will automatically get that upgraded card for free, with you just paying the fee for the initial car that you would have bought in anyways. So there are some interesting partnership programs that go along with credit cards that you might find interesting there. Another one is exclusive marketplace access, where a lot of these credit cards have their own marketplace ecosystems of sorts, where you can buy discounted goods or discounted items, or even discounted event tickets, or you might get early access to certain events, stuff like that. And there's so many more potential unique benefits that, again, you're just going to have to look at various types of credit cards to see what are the benefits that I care about, what are the things that I want or that are going to be useful for me. So, with all that said, how can credit card companies afford to give out so many benefits? I already touched on one of these things earlier, but really there are two main types of credit card companies and how they can afford to give out these kind of benefits. First, there are the side product companies, where credit cards are their side goods. These are more designed as marketing materials to draw people into their stores, to draw people in to use their other main service that will subsidize the cards. These companies are, for example, banks and retail stores. They're a great example of this. JCPenney's. Every time you go there, if you don't have a JCPenney's credit card, they'll often say, "Would you like to get a JCPenney's credit card? It will get you 30% off your purchase today." That's a way to get their foot in your wallet to say, we want to have you come back to this store time and time and time again, and we'll incentivize you to come back to our store time and time and time again. The same thing with banks, where if you set up a bank account with a bank, whether that's checking or savings or whatever, banking is their main way of making money. They take the money that you invest in them, that you store in their savings, in your savings account or your checking account. They take that money, they invest it on their own, and they make a bunch of money off of that. And to incentivize you to stay in their ecosystem, they'll provide you with some very low-level credit cards. Wells Fargo is a great example of this. I'm not a fan of Wells Fargo personally. They've had their fair share of controversies in the past, but I'll still use them for this example. They have a number of their own credit cards. They have a number of cashback credit cards and a number of points-based credit cards. And when you compare those to many other credit card first providers where credit cards are their business, those credit card first providers are going to be able to give you much better benefits overall and are going to be able to serve the user typically much better than those bank or retail store credit cards. That said, those bank and retail store credit cards, they have their place. They have their uses. And for some people, they're great. They're perfect. But when you look at penny for penny, dollar for dollar, typically the value that you get from credit card first companies in their cards compared to the retail or bank side cards, typically you're going to see those credit card first companies giving you much better offers or much better deals in the long run. And speaking of those types of companies, that is the second type of main credit card company, where that is their main product. These are the companies that profit from the annual fees and the debt interest of their users. These companies tend to actually offer more benefits with their cards to draw people in than profit from the people who are either financially irresponsible and use those profits that the company makes to benefit the people who are financially responsible and actually use the benefits. So they make money by people spending way too much money, who don't pay off their statements on time, who are racking up interest on things, and they also make money on the people who don't actually use the benefits. There are a lot of people who will get a nice credit card. They'll say, "Awesome, I have this cool credit card. I'm just going to keep on stacking points, getting cash back, but then they never actually use it. Or maybe these people pay for an annual fee credit card, which for some people, annual fee credit cards are great. You can get many more opportunities with them compared to just the free credit cards. But perhaps they pay for the annual fee, but they don't actually use it enough, or they don't use it in the right way to pay off that annual fee or to get more from it than they're actually paying into it. This is how main product credit card companies are able to make their money, and they make a hell of a lot of money with it. So when you're looking at the two types of credit card companies and how they can afford to give out so many benefits, as I mentioned throughout this section, banks, retail stores, where places like these, where this is their side product, it's more of a marketing thing to get people in the door, those credit cards can be nice for some people, but when compared directly head to head against companies where that is their main product or their first number one product, where their offering is, we want to give you a credit card that has a number of benefits to it, typically they just aren't going to stack up compared to these mainline credit cards. Next thing I want to touch on is actually getting these credit cards, of how this works. And to do that, we have to look at your credit score. And this is something that is kind of nebulous or doesn't make sense to a lot of people. You hear the term credit score and you think, I want a good credit score, I want an excellent credit score. But what does that even mean? Your credit score is a semi-arbitrary score used to rate how quote-unquote trusted you are with loans/credit. The higher your credit score, the more likely you'll be approved for a loan or for a higher tier of credit cards down the line. There are typically 5 factors that go into calculating your credit score. This will vary some from place to place, but generally, this is going to be your credit score. And not all places will actually go off of a standard credit score system. Some places will go off their own totally unique system. But generally, most places will at least consider your credit score before giving you a credit card. So these are the 5 main factors: payment history, credit utilization, length of credit history, credit maximum, and new credit. So let's start off with the payment history, which is about 35% contributing toward your credit score. This is your history of making on-time payments, late payments, or missed payments. If you make your payments on time, that's going to give you a higher credit score. It's saying, hey, this person does a good job at paying their loans or paying their debts. Second is credit utilization, which is about 30% of your credit score. This is the amount of debt you're carrying relative to your available credit. This includes the percentage of credit used on individual accounts or across all accounts. Essentially, you want to try to have a little bit of a balance. Just have a small regular balance to show that you are actually using your cards. Don't just have it set at nothing, because then that sort of shows places that, okay, you can give them a credit card, but they're not actually going to use it. And for places that are profiting from the interest, that gives them some hope to say, oh, this person does use their credit card. We get some hope in that this person might forget a payment, or they might not pay in full, so we might get a little bit of interest on them. So have some credit available to you, but use it a little bit. Typically, you don't want to be seen as using all of your credit or maxing out your credit. Third is length of credit history. This is about 15% of your credit score. How long have you had credit, including the age of your oldest accounts and the average age of all of your accounts? So once you get your first card, it's typically recommended to hold on to it or to just use it a little bit, even if it doesn't match up or compare to some of the newer cards you might get that might have better offerings or just better points values or whatever. This is essentially your credit score is saying, how long has this person actually had credit to begin with, and what's the average age of all of their lines of credit available to them. Typically, the longer that you've had credit available to you and that you've been using it, the more trusted you're going to be with it, because places will say, okay, this person has been around credit for a while, they recognize how it works, I know they're probably going to pay me back when I offer them credit. Fourth is the credit mix. I misspoke earlier. This 4 is supposed to be the credit mix, not the credit max. This is about 10% of your credit score, and it's looking at the variety of types of credit that you have, such as credit cards, standard loans, personal loans, mortgages, and student loans, to say, what is the actual makeup of this person's credit history? Of what are they actually using their credit for? Does the person have a bunch of personal loans? If so, I might not be so trusting towards them. If they have just a mortgage or some student loans, then maybe I'll be more trusting towards them because they're investing their money or they're trying to spend their money wisely on something. Finally, is number 5, new credit, 10%. This is going to be looking at recent inquiries about like new account openings and credit account closures, stuff like that. This is essentially looking at your recent activities to say, has this person been applying to a bunch of credit cards recently? If so, then we're probably going to hold off and say, let's wait up here for a second. The more new accounts that you open, the less likely you're going to be able to get a credit card in the near future. And a lot of credit card companies will have a specific rule saying you can only open up X number of cards in a certain amount of time, or you can only hold a certain number of cards with us max at any given period of time. So this last one isn't too important, but essentially it just means don't go trying to open a bunch of credit card accounts all at the same time. It's not going to look good on your credit score. That about covers most of the credit score aspect of it and sort of why it matters. It's mostly about the better credit score that you have, the more likely you're going to be approved for a loan and for higher tier credit cards down the line. So to help you get started, I'm going to walk you through my current recommendations for some first cards and a simple strategy for each credit card and some credit card stacking things that can help you make the most of all of your credit cards. So your first credit card and associated strategies. This will heavily depend on the credit card ecosystem that you want to be a part of. Also, most of these strategies are designed to help you get the most points possible, so you can use that for gift cards, flights, and more. I won't be sharing all the benefits and perks of these cards, but I will go over some of the main benefits. And don't take any of these as a hardcore, this is what I should do, this is what I have to do. These are 3 common strategies that you'll see online that I've heard many good things about, and you'll probably hear them about more in the future if you do go down this path of researching credit cards. Also, I will say this now. This is not financial advice. This is me doing research and saying, this is what a number of people have recommended, and this is what I'm going to talk a bit about. I'm not recommending that you go out and get all these cards. Do that at your own discretion. It's your money. You do with it what you want. But let's talk a bit about these 3 strategies. These are the Chase Trifecta, the Capital One Bifecta, and the American Express Trifecta, sort of. Also, before I discuss these strategies, how I'm going to do this is I'm going to talk about each of the cards in the strategy, some of the perks and benefits of each of them, and then at the very end of that section, I'll talk about how these cards are used in conjunction with one another. So let's start off with the most popular of the bunch, the Chase Trifecta strategy. And as the name implies, Trifecta 3. So it's 3 cards, primarily a points-based strategy. So the first card in the system is the Chase Freedom Unlimited card, where it's a no annual fee card with 1.5% cash back on everything, 5% cash back on travel through Chase, and 3% cash back on dining. Note that this is a cashback card and not a points card. The other 2 of these are going to be points-based cards. Second is the Chase Sapphire Preferred card, which has a $95 annual fee, no foreign transaction fees, 3 points per dollar on dining and groceries, 2 points per dollar on travel, and a $150 partner value credit, and much more in there. And finally, as part of this strategy, is the Chase Sapphire Reserve card, which has a $550 annual fee, no foreign transaction fees, and then a whole litany of points ranges for various companies and various other offerings. So we're going to dive into those. 10 points per dollar on Lyft rides, 10 points per dollar on hotels and car rentals, 5 points per dollar on flights through Chase, 3 points per dollar on travel and dining, and 1 point per dollar on everything else, with a $300 annual travel credit, $100 priority pass select for that's either global entry, TSA PreCheck, or Nexus, and so much more. So just from hearing all of that, you could probably get some idea of what the strategy is going to be. It's going to be using the Sapphire cards for their bonus points on those specific areas, namely for Lyft rides, for hotel and car rentals, for flights, for travel and dining, stuff like that, and on groceries. And then using the Freedom Unlimited card for any other purchases, because the Sapphire cards are going to be good for points. The Freedom Unlimited card will then be good for sort of scooping up everything else to say, if this doesn't give you extra bonus points through the Sapphire cards, I'm going to get a little bit extra cash back with that 1.5% cash back on everything, compared to the Sapphire cards, which don't have that same 1.5% points value base on all other items. So overall, it's a fairly good strategy. I can see why it's recommended so frequently, but it's not my favorite strategy because 3 cards just is a lot to balance in my mind. Personally, I like the second option here, which is the one that I'm personally shooting for and kind of my favorite. It's the Capital One Bifecta or 2-card strategy. This is a entirely points-based strategy. There are 2 cards in the system, starting with the Capital One Saver 1 card, which has no annual fee, and then 5% points on hotels and car rentals, 3% points on dining, entertainment, streaming services, and most grocery stores, and then 1% on everything else. And much more, including Capital One Dining and Entertainment, free authorized users, extended warranty on selected items, virtual card numbers, and transferable cashback, points, and miles. So it's standard, this card is actually supposed to be a cashback-based card, but in the Capital One ecosystem, you can actually convert cash back into points, into miles, into anything. So it's all technically one unit of whatever. The second card in the system is the Capital One Venture X card with an annual fee of $395. This card has 0 foreign transaction fees, $300 of travel credit via Capital One Travel annually, $100 in global entry or TSA PreCheck annually, 10x points on hotels and car rentals, 5x points on flights through Capital One Travel, then 2x points on all of their purchases, and much more, including free authorized users, free cell phone protection / insurance, extended warranty on selected items, virtual card numbers, transferable accounts, like for cashback points and miles, etc., access to Capital One lounges in airports, and much more. The main strategy for this is as follows. Use the Capital One Saver 1 card for 3% back on dining, entertainment, streaming, and most grocery stores, and then use the Venture X for literally everything else. It's a very simple strategy. All you have to remember is food, entertainment, streaming, or basically just food and entertainment for the Saver 1 card, and then VentureX for everything else. Super simple, easy to use, and you're probably noticing that the VentureX card, when you look at the annual travel credits for it, the $300 travel credit and the $100 global entry / TSA pre-check, the nominal value of it is you're actually technically getting $5 back just by using those credits on the card that you get annually. So interesting stuff like that you get with premium credit cards where, yes, it does have a pricey annual fee, but if you actually use the things on it, you're getting your money back right away. And that's not even including the points and how you can effectively use those. Finally, there is the American Express quote-unquote trifecta. This strategy exists. I haven't heard many people actually using it, and American Express is better seen as like one-off cards, and I'll be touching on that a bit later. But if you were interested in an American Express trifecta, here it is. Starting off with the Amex Blue Business Plus credit card. No annual fees, and then 2 points per dollar up to $50K per year. Simple as that. Next is the Amex Gold card with an annual fee of $325. Then you get $120 in dining credits, $120 in Uber Cash, 4 points per dollar at restaurants, 4 points per dollar at US supermarkets, 3 points per dollar on Amex flights, 2 points per dollar on prepaid hotels, and then 1 point per dollar on all other purchases, and much more. Then finally is the Amex Platinum card with a $695 annual fee, no foreign transaction fees, and then with all the following benefits of $200 in airline credits, $200 in Uber Cash credits, $100 in Saks Fifth Avenue statements. Honestly, not sure what that is. $200 back in prepaid hotel bookings, a $189 Clear Plus membership, $240 in digital entertainment credits, $300 in Equinox credits, $100 in global entry, $85 in TSA PreCheck, and 5 points per dollar on flights via Amex, and much more. The general strategy for this card is as follows from what I've been able to see. It's use the Platinum card for travel, use the Gold card for restaurants and supermarkets, and use the Blue card for everything else. So with all that said, what about the one-off cards that you might want to consider? These are very much niche cards where they might have some special unique benefits to them, or it might have other simple use cases that people might find interesting to say, maybe I don't want a whole big credit card strategy, I just might want a one-off card or something that has a very unique benefit that I'm interested in. One very popular, somewhat new card at the time of recording this is the Bilt BLT credit card, where this credit card actually allows you to pay your rent with it. And with that, you're able to get points by paying rent. So you can use those points with their credit card partners, whether that be airline partners or other places, much in the same way that you would use points with the other main credit card ecosystems. But the reason that this card is so popular is that you get that rent option, and you don't have to pay any extra fees in rent. And if you would normally get charged extra fees for paying rent with a credit card, the company itself actually covers those fees for you. So that's just an interesting credit card that I hear a lot of people are interested in. Next is the Citi Double Cash card. It's CITI Double Cash, where it's unlimited 2% cash back, 1% back when you buy something, and then 1% back when you pay something. So 2% cash back unlimited is generally unheard of in most situations, so that's why a lot of people like this. For people who really like cash back, the Citi Double Cash card makes a lot of sense for them. Then, as I mentioned earlier, Amex cards, a lot of them are actually seen as good one-off cards or good complementary cards to other main strategies, such as if people are using the Chase trifecta. Maybe they'll replace one of those cards instead with an Amex card, or they just like one or two aspects of some of the Amex cards. Then they pick up those ones and use them as sort of one-off cards. Not something I'd necessarily recommend, but for some people, it's interesting. Then you have the business-specific credit cards, where these are good if they're relevant to you. For example, being airline cards, where if you exclusively fly on Delta Airlines, you might want to consider the Delta Partnership credit card, where you get extra airline miles through it and probably a couple other benefits. That said, even considering stuff like that, I would typically consider just going with one of the other strategies I mentioned earlier compared to picking up one of these business-specific cards, because you shop at more than just that one business, I presume, and you can get more benefits overall by some of the other strategies I mentioned earlier. And finally is the forgiveness-based cards, where these are cards for if you have really bad credit, or beginner cards, where maybe you don't have much of a credit history, you don't have much of a credit score. A lot of credit card companies will have these cards built in or made for people who either don't have credit or have a bad credit history and just want to slowly build up their credit score again so that they can eventually, get loans, get mortgages, get a good credit history so that they can do more financial stuff in the long run. So as you can tell, there's a lot that goes into choosing credit cards. There's so many options available to you. Honestly, this is a case of just do your research and figure out what works for you. What do you prioritize? What do you care about? I'll be diving into that a little bit more later. But before we get into that, what are some of the common mistakes that people make with credit cards? I've already touched on a number of these, but I'm just going to list them out plain as day for you to hear right now. There is, first of all, paying for a credit card that you're not going to get a meaningful return on. Not to say that cards with annual fees are bad. In fact, many of them are great, as I've mentioned earlier, if you use what they have to offer. And that's the key. You have to use what they have to offer. So if you're just paying for a card to pay for it, to have the status to say, I have an Amex Gold card or I have an Amex Platinum card, and there's some sort of status associated with that, then you're just paying for a status symbol. And if you're okay with that, great. But right now, I'm just talking about us making the most of the money that we're spending anyways. So if you're going to spend money, why not spend it smart and meaningfully so you can actually get a good return on it? There's no point in paying for a card and holding on to a card because I must have my points if you're not actually going to use those points for anything. The whole point of this is to actually make the most of what you're doing with these cards, not to just have them to collect them. Next is paying off credit cards with other credit cards. This just isn't a good look for most people. Sure, sometimes you can take advantage of a zero interest APR thing, like right out the gate to say, oh, this other credit card that I have actually has a lower interest rate on it compared to this credit card I have a bunch of debt on. I'm going to pay off that high debt credit card with this lower debt credit card or try to get some special deal with it. Sure, you can do it. I just wouldn't recommend it. Next is only making minimum payments, and this is what can lead to you paying off credit cards with other credit cards. If you're only making the minimum payments, that's going to take you months, if not years, sometimes to pay off an item in full. And the amount of interest that you're paying in the long run, it's amazing how much money you'll actually be spending on a pack of gum or just a small item if you choose to pay just the minimum payments on it. If you can make all of your payments in full at the end of each statement or by the time that your statement is up, then you don't have to pay anything extra in interest, and you can really make the most of your credit cards that way. Another common mistake I see people making is missing out on the limited time card bonuses. As I mentioned earlier, most cards will have an entry bonus of some sort, where if you spend X amount in the first 3 to 6 months, you're gifted with a bunch of bonus points or a bunch of bonus cash back. To make the most of these, wait to pick up a card until you know you're going to have to make a big purchase in the near future that will contribute you towards earning that big bonus. This isn't so much of a mistake, but just missing out on, you're just leaving something on the table that you could otherwise easily get. Then finally, the biggest mistake is getting into credit card debt and staying in credit card debt. This is why we don't make minimum payments. This is why we don't pay off credit cards with credit cards. We pay off everything at the end of each statement. We make sure that we are financially responsible so we can make the most of our credit cards so that we own them and that they don't own us. The last thing I want to touch on in this episode is some of the skills that will help you as you're going through your credit card journey of skills that will help you make the most of your credit cards and ultimately develop some good financial habits. One is research. The fact that you've already listened to this episode all the way through so far has proven that you have some good skills of research. This is the ability to research and figure out on your own of what credit card strategy is right for you. For some people, that'll mean staying away from annual fee cards because they just don't want to pay the annual fee, even if they might get some great bonuses from it. For them, they don't want to do that. For some people, it'll only mean carrying one credit card instead of having a whole litany of them for a big strategy because they love the simplicity of it. And there's nothing wrong with that. In fact, that's a great thing. Ultimately, your credit card strategy should be designed with you and your shopping habits in mind. Second is the skill of patience, the ability to wait on buying something you want, and the ability to wait and build up your points/cash back so you can actually make the most of them. If you're constantly spending your points as you get them in, sure, that's fine, but you're probably not making the most of them. That said, if you also wait too long to use them, you might just never use them to begin with. So, a balance of patience and gratification. Next is basic accounting. Just know how much money you have and how much you're actually able/willing to spend. Don't be spending every single cent that you make. You want to have a good savings account. You want to have a good emergency fund. You want to have a good checking account. You want to know that you can afford whatever it is that you're buying. So regularly check in on your accounts. Make sure that you're not just automatically money comes in, money go out. Have some sort of savings plan so that you're not spending everything away. Because you should not be focusing on your credit cards first. You should be focusing on your basic financial needs first. Building on that is the skill of financial discipline. This means being able to tell yourself no, you don't need the thing. At the same time, also being able to tell yourself yes when you do actually want the thing and you can easily afford to buy the thing that you want. This is knowing where you are financially. And finally, with all that said, when all is said and done, you need to prioritize. For example, you should prioritize getting yourself fairly stable financially before you're worrying about collecting points. You probably shouldn't be worrying about maximizing your credit card points if you're deep in debt and you can't afford the annual fee on the cards that you're using. In summary, credit cards are a double-edged sword. When used correctly, effectively, and responsibly, they can be a wonderful tool that enriches your life, allowing you to travel the world for cheap, if not next to nothing. When used poorly, though, they will be a burden on you and cost you greatly. And guess what? You'll be the one funding the trips of other people who are traveling around the world. So what do you think? Are credit cards worth the risk? Do you have your own credit card strategy? Let me know in the comments below. If you enjoyed this episode, then please share it with a friend you think would like it, or share it on social media. It would absolutely mean the world to me and it helps the podcast grow so much. With all that said, thanks for listening. I greatly appreciate it, and I'll talk to you all later. Ciao.